So I think the spring market is going to be extremely challenging and competitive for those looking to buy a house. Multiple offers is not going to be the exception. It's going to be the norm pretty much across Canada, I think. Hey there, and welcome back to another episode here on Bald Prairie Real Estate. My name's Matthew Pfeifer. I'm a real estate agent from Regina. That's my trusted assistant, Matilda. This is my 2022 Canadian real estate market recap video. I want to take a look back at all the different predictions made by all the different banks and the real estate companies. Let's see how accurate those were. Of course, a lot of them got revised multiple times over. Then we're going to take a look at what my forecast and predictions for the year were, see which ones I got right and which ones I definitely got very, very wrong. I actually think house prices in Canada are going to increase between 8 and 10% this year. And then I want to look at what I'm calling some real estate myths, because there's a lot of misinformation people are saying. These are rules you can live by on the real estate market that simply I don't feel are accurate, and unfortunately a lot of people are saying that they are, so we're going to take a look at those. But we're going to start off with another terrible bad dad joke. I don't know if you guys knew, but I'm actually afraid of elevators. But don't worry, I'm taking steps to avoid them. If you have a terrible joke that I can use in a future episode of Bald Prairie Real Estate, put it in the comments below. Let's start this recap video off with what the various economists and the banks and the real estate companies were forecasting, and then we'll jump into mine. Now, forgive me, I got to reference my notes here, but let's start off with TD. They expected prices to be up 7% by the end of the year. RBC said sales would be down 20%, prices up about 3.5%. The Canadian Real Estate Association expected sales down about 9% and prices up 7.5%. Royal LePage company I work for said prices would be up 10.5%. Remax had them up 9%. Fitch Ratings had them up between 5 and 7%. So very clearly, expectation from all the different experts was that sales would be down and prices would be up between about 5 and 10%. Now let's see what I had to say for my predictions. The first prediction I made is that we would see fewer homes sold in 2022 than we did in 2021. And I felt that was going to be a combination of the market just running out of steam and higher interest rates. Well, we definitely saw that. The market ran out of steam once we saw interest rates going up like crazy. We saw far fewer sales this year than we did last year. The next prediction I made was that at the end of the year, prices nationally based on the benchmark price would be up about 8 to 10%. Well, I didn't get that one very right. Prices right now are actually down about 1%. Now, if you would have looked at this at the beginning of the year in the first quarter, you would have said, geez, 8 to 10% increase. That's looking pretty conservative with how fast prices are increasing. But obviously, we all saw a very significant shift once the Bank of Canada started raising interest rates in the spring. I felt that the condo townhouse market, especially in the downtown kind of core centers, that was going to be a strength this year, and it absolutely was. I said once people start to realize, hey, I kind of like being downtown and all the nightlife and all the excitement and quick access to work and transit. Once people realized that they were going to start coming back, absolutely that happened. But also with how much prices went up, people just simply couldn't afford single family homes. So we saw a lot more strength in both those markets, even in say Toronto, where prices have decreased significantly. That decrease in single family homes is much more than the condos and townhouses in the downtown core right now. I was really worried going into the year how low inventory levels were and what that was going to do to the market. We saw what that did in the spring. Basically bidding wars on pretty much everything that hit the market and prices going through the roof. But even still, we've seen a massive slowdown in the market. The number of new homes being listed for sale is also down significantly, and really that inventory problem still exists. It's much better than it was in the spring, but there's not really many markets where you would say there's a whole lot of houses for sale right now. The rental market was another area that I was really worried about, combined with the large number of new Canadians coming to Canada and now seeing how many buyers are sitting back on, I'm just going to sit this one out right now, wait to see what happens with rates and wait to see what happens with home prices. We've seen an exceptionally competitive rental market in Canada. In fact, we're now seeing rents at record highs. Heck, there are bidding wars going on for rentals in many cities in Canada. That is just crazy. I never expected to be this competitive, but this is very competitive right now for the rental market, and it doesn't seem to be letting up very much. And now let's talk about the big one, interest rates. I felt we were only going to see 2 or 3, maybe if we got really crazy, we'd see 4 rate hikes in the year at a quarter point each. So 0.5 to 1% was kind of all I was thinking. Boy, I got that one wrong, and I think just about everybody else, because even the Bank of Nova Scotia, which at the time when I did that predictions video had the most aggressive forecast for how many rate hikes we're going to see the year, they said 8 quarter point bumps, meaning 2% in total. So even the most aggressive forecast didn't come anywhere close to the 4% that we ended up getting this year. So that was the predictions, but what actually happened? Let's kind of do this as a recap timeline, what happened in the year, and then we're going to get into some really important lessons and takeaways from what we can learn as to what happened this year. We started off the year on an absolute tear, red hot, inventory was low, sales were sky high, prices were going through the roof. Everybody was talking about blind bidding, how bad that was. We need to fix the Canadian real estate market. The government actually was going to make it a criminal offense to have those sealed price, blind bid, auction style, selling your house that way. And there was going to be a homebuyer's bill of rights that was going to protect homebuyers. I said at the time this was nothing more than political hot air, and well, guess what? This hasn't seen the light of day since then. Now, you've probably heard that home prices peaked in February or March this year, and while that's true for Toronto, Vancouver, Ottawa, cities like that, there's a lot of cities that actually saw home prices peak April, May, June, even into July. In fact, for example, in Calgary, prices are higher today than they were in February this year, although they still have trended down a little bit. But for general sake, you can say that home prices in Canada peaked out this year sometime in the spring to early summer. Now, remember when the Bank of Canada said that rates would stay low for a very long time?
Interest rates are very low and they're going to be there for a long time.
Guess it turns out a very long time is less than 2 years, because starting in March, we saw the Bank of Canada start raising rates, and they have now increased them 4%, making this one of the fastest rate hikes in history and the fastest and largest rate hike we've seen in a very long time in Canada. Now, the reaction from the real estate market was basically immediate. Now, I heard a lot of people say, and they put in the comments all the time, how interest rates have a lagging effect on the real estate market. We're going to talk about that in the next section here, because interest rates have impacted the market far faster than I think a lot of people are thinking they have. Since the Bank of Canada started raising rates, we have seen home sales in the country plummet 30 to 50% in a lot of cities. Now, that's not just versus last year, that's actually versus the 5 and 10 year averages, because at this point, any comparison to last year is utterly pointless. But the prairies and the Maritimes are the areas that tend to be bucking that trend, with sales in and around, in some cases higher than they would typically be at this time of year. In fact, Calgary set a record for this year for the most number of homes sold ever. And of course, that was a big start, but it continued very busy back half of the year, even with rate increases. But not just sales decreased. The number of people putting their homes up for sale and total inventory also has continued to trend down well below normal levels. And even the most balanced markets in Canada really are only at that normal kind of balanced level. We've got no markets that are really in buyer's market territory in terms of inventory levels right now. Now, I want to put up a chart here showing the aggregate benchmark price in Canada. Now, I use that because I think it's a more accurate reflection of price fluctuation than average and median price, which both can be skewed by the composition, types of homes that are selling. And with home sales down 30, 40, 50%, that is even more pronounced in that average price, whereas the benchmark price is not affected by that. So you can see from the start of the year that we saw a huge run up in prices all the way till March. That, of course, is when the Bank of Canada started raising interest rates, and then we see essentially an immediate reversal of prices. Now, clearly, we're still seeing prices decline, but the pace of price declines is also slowing down. And here's what I mean. From March to April, prices dropped 1.3%. From April to May, they dropped 2%. From May to June, they dropped 3.6. From June to July, they dropped 3.4. From July to August, they dropped 2.6. August to September, 1.8. September to October, 1.5. October to November, 1.2. Now, I know I've seen all the fancy charts showing what happens in asset bubble corrections, about how, things go up, then they come down, and this is with a despair stage and capitulation. I've seen all those charts, or the one that's the head and shoulders chart, and people are pointing at that saying, see, this is what you can see is gonna happen in the real estate market. Here's kind of your forecast. Well, I'm actually working on a video right now that looks at real world examples of what's happened with prices, and I'm specifically looking at what's happened in Canada. And I'll give you a little spoiler, they don't usually follow the pretty fancy charts. So get subscribed, because that video is coming out very soon. This is the section where I want to bust some of the myths about the real estate market And I want to talk about some lessons that I think we can learn, because this has been a wild ride and a lot of important information can be taken from this. The first thing I want to talk about here is what's called the 1%, 10% rule. For those that don't know, the idea is that for every 1% change in interest rates, we say a 10% change in prices. So if rates go down 1%, prices go up 10%. What I can't believe is that there are people that still consider this a rule, because we're going to test it and see what actually happens when rates change. Let's wind things back here to March 2020. Bank of Canada drops rates 2%. So that's what we see, variable rates go down 2%. The fixed rates went down about 1.5% in the same time frame. In the next 18 months, so we should expect to see some in the neighborhood of 15 to 20% increase based on those rates. We saw a 43% increase in home prices. And of course, some cities were far more than that, and some were far less than that. So this 1%, 10% rule isn't off to a good start. Now let's look at what happens when interest rates start rising and whether this 1%, 10% rule holds true. Now I know I can already see people going in the comment section, well, we haven't seen the full impact of these interest rate hikes because it takes time. I'm going to be talking about that in a second. But to which I respond, then why did prices increase basically immediately when interest rates dropped? Just food for thought there. But based on this 1%, 10% rule, interest rates have gone up 4%, so we should see prices drop 40%. Now we're right now in the midst of the fastest and most aggressive decline in house prices in Canada in a very long time, and we're down 15% right now. The next myth that I'd like to talk about is that it takes time for interest rates to impact the real estate market. So let's bring back the charts and see what the numbers say. Let's start off by looking at March 2020. That's when the Bank of Canada dropped rates basically to nothing. And we see basically immediately prices start to increase. So interestingly enough, there's no lagging indication from these rate drops when they do drop them and prices start increasing pretty much instantly. Okay, but what about when the Bank of Canada decides to raise interest rates? So up until March of 2020 this year, prices have been on basically a straight line up, and then the Bank of Canada in March changes and starts increasing interest rates, and we see an immediate response to those interest rate hikes with prices starting to turn down. And I find it really interesting that the months where we saw those supersized 75 and 100 basis point increases to the interest rate also happens to be the same months we saw the largest decline in home prices. So what I'm saying here is that if these interest rate hikes are a lagging indicator, or it's going to take time for them to see an impact on the market, you would think that we would see the pace of price declines continuing the same or potentially even increasing as these larger interest rate hikes have increased. But instead what we see is basically the larger the rate increase, the faster the price drop. And now that we've seen the Bank of Canada start to taper off those rate increases and signaling that we're starting to get to the top of these rate hikes, we're also seeing the rate of price declines slow down. Now this could be just a coincidence, but you have to admit it's a rather interesting coincidence that as soon as rates get dropped, prices go up, and as soon as rates increase, prices come down. Just a really interesting coincidence, I think, hey? As I said earlier, nationally prices are down about 15% from the peak and 1% year over year. When you go to Toronto, they're down more than 20% from the peak, down about 1% year over year. In Calgary, though, they're down about 4.5% to 5% from the peak, but up 12% year over year. And even if you go back to Toronto or Vancouver, where they've been hardest hit by price declines, the outside, for example, of Toronto, that GTA surrounding area, has seen a far more significant price decline than, say, downtown condos in the middle of Toronto, where there hasn't been nearly as much of a price decline. What I'm saying is that what's happening in even just the city, but for sure nationally, is not what's happening in the areas that you may be looking to buy or sell. You want to know exactly what is going on in your neighborhood, not the city or not the country. If you are thinking of buying or selling, if you're in Regina, don't worry, my team has got you covered. But if you're not, I have a great extensive network of agents across the country that I'd be happy to set you up with. Make sure you got the best agent in your area. There's a link in the description for this video to book me in for an appointment. I'm going to give you a call, learn about what's important to you, and then pick that perfect agent for you. By the way, why don't you do me a favor? You've watched this far, hit that like button for me, subscribe if you haven't already, leave comments below. I love chatting with you guys in the comments section. And if you haven't checked it out already, here's my most recent Canadian real estate market update, covering all those big markets in Canada. Find out what's going on in your market right now. As always, guys, thanks very much for watching.